Hey, what's going on, traders? Actually, today we had a very big move that broke out, and if you didn't catch it in the beginning, it was pretty much hard to get to. So we had a lot of congestion and consolidating before the move. On that move, I actually wasn't. I had to make a run, so I wasn't at my trading desk for the move. So unfortunately, I didn't get to participate in it. But one of the people I've been coaching for the past, well, a little over a year now, and he was able to get into the move, and he had an early entry on it. But that's what I want to go over. This is the 10-minute chart right here, and as you can see, we have some congestion forming. But this is one thing to note that I went over. This is a good example on failed patterns. Note you have this triple top. This is a little off the subject, but just wanted to go over this. You have this triple top here, and then this big bar of selling pressure with no follow through. So at this point, we wonder, why did this pattern fail? And that's when you have higher time frames either not in alignment or market in terms, but basically the higher time frames were bullish. So regardless, even though you see this bearish pattern, this is a buying opportunity to someone in the higher time frame. They could care less what this pattern looks like, a triple top or whatever the pattern is. They could care less about that. They see prices going down. They've been wanting to get in for a while. So this is a buying opportunity. And so that's how this pattern ended up failing. But this congestion right here, what is this congestion telling us? I mean, you could probably try to get in different spots and you maybe got whipped around, but we don't want to guess. We want to have high odds probability on what could have been a high odds play that said, hey, prices should take off. And based on this, you can try to speculate in hindsight when the area was to take off, but the real indication wasn't on this time frame. You had to consolidate these bars and go up to a higher time frame, and you could have went to the 30 minute. If the 30 minute gave you clarity, that was fine. But in this particular instance, the hourly happened to give us some clarity. So here we go here on the hourly, and right here, this was the clarity bar. Now what does this mean? This is just a green bar. What any green bar do at any particular time? Well, it was 2 points to this right here. One, this was at resistance, but we did have a void overhead. So by this consolidating here at the high, this was absorbing the supply that was here, and by it staying at the high, that told us these tails is telling me there's selling pressure. Each hour there was constant selling pressure. This bar closed on its high. What that told me, the sellers ran out of steam at this point. So this, in context with the trend, this told me that, hey, sellers are running out. This bar all the way to this period ended, there were sellers there. Not just because the period ended don't mean the sellers stopped, but that's just at what point we decided to cut off our time frame, which just happened to be the 60 minute. So this told me the market was gaining strength. So now what I'm looking for is a pullback in a smaller time frame. And as you see, we got a pullback in a smaller time frame. And those people recognize this, that the bears pretty much were losing control by this selling pressure ceasing. So this pullback, which was over in here, gave the buying opportunity. And that's how you do it. Now some people, they teach you to buy over highs and stuff like that, and that's fine, and those are playable. But then your stop is supposed to be down here. I don't buy those, and I don't chase stocks. So I can't buy it pretty much at a decent, nice pullback. I don't want it. So I could just sit there and wait, and the stock could go up and go up without me, but I'm not buying that. So I don't buy over this high right here. So I need to be buying it in here. If I don't get it in here, I don't want it. So this is low risk. Even if you would have bought it in one of these spots, the risk is minimal. So one of these spots, the risk is minimal. So at that point, that is how you go ahead and do a higher time frame from clarity. You combine the time frames. This Oh, this this gave us the point. This said, hey, bears are losing control, selling pressure. Selling pressure has ceased and slowed down, or pretty much slowed down. The bulls were able to hold this high in an uptrend with room to move above. Take all these things into consideration, then that's what price is telling you. There's no oscillator or indicator or anything that needs to tell me that. I mean, I don't know, anything about what was going on with those, but all I know is what price was saying. And price told me, hey, this is what's going on. And so, that's how you read congestion and consolidation. So I hope this helped out. I wasn't going to do any more or less this week, but this just seemed like a perfect opportunity to do one. So until next time, traders, talk to you later.